I oftentimes get the question about financial planning. What can I do if I move into this industry or if I go on to get my CFP? What can I do with it? What does that mean for me? And so I want to spend a little time answering that question. It's a difficult one to answer, though, because financial planning is an amalgamation of so many areas. And uniquely, financial planning is the tree that grew backwards. Let me explain that. If you think about the legal profession, if you think about the medical profession, if you think about accounting as a profession, each one of those grew from generalization to specialization. What's so unique about financial planning and part of the evolution that's happening in our industry today is it's the opposite. It's grown from specialization to generalization. So, myself, even, I came more out of the investments world before I came into academia. So I saw financial planning through the lens of investment planning, and many people still do today. The problem with that ideology is it can forego some of the great synergy that happens in considering financial planning in a holistic nature, the interactions that happen in each one of the modular areas. So, some of these roles that I'm going to talk about over the next few minutes are very specialized. So there's specialized roles that might not focus on holistic financial planning. However, they're still within the umbrella of financial planning. I'll also say some of you may be listening to this and disagree with the analysis that I have up here of what each role is and what the attributes are. The problem again with that is our industry, when I define one company, can be defined five different ways. So we're in an industry that has a lot of bleed over and it has a lot of crossover, which makes it hard to compartmentalize. And I think for students coming into the profession, makes it really difficult to categorize and make a determination of where you want to go to work. Hopefully, over the next few minutes, though, what I'll help you do is see the landscape or the environment that's out there in the most unbiased way possible to provide you education to make decisions on what your financial future might look like. So you'll see I've broken into three main quadrants here. So you have sort of the dark blue quadrant, you have the turquoise quadrant, and then you have the yellow quadrant. And I've grouped these together saying that their attributes are somewhat similar. Not exactly the same. You'll notice that I have some bleed over even in this area. And I'll tell you that there are some companies that would fit into multiple categories. So you have some companies that may fit into both blue and yellow and maybe even the turquoise color as well. Let's start over here in the dark blue, almost black color with wirehouse firms. So wirehouse brokerage firms, sometimes referred to as broker dealers. These are full service brokerage firms that provide services that could range from investing to banking to investment banking, research, trading, wealth management. When you see the word broker and you see the word dealer, they wear two different hats. Most of the time, people that work in a wirehouse firm are series licensed. So they're going to have a multitude of what's known as series license. Many of them are going to have the Series 7, and many of them are going to have the Series 66. There are other licenses, of course, that people who work within the wirehouse brokerage model might have, but in general, those are the types of licenses around investing. Somebody working inside of a wirehouse firm historically would work with a client in selling mutual funds, in selling individual stocks, in selling individual bonds to create a portfolio for an individual. So we could go into probably a 20-minute lecture at this point as to the role of wirehouse firms and how they develop financial markets, how they're some of the oldest areas in the early history of financial planning. But I think I'll stop with that really broad overview. Some names that you may be familiar with that would be defined loosely in wirehouse brokerage would be a firm like Merrill Lynch, Morgan Stanley, UBS, Wells Fargo. So these are firms that you've probably heard the names of. Wirehouse firms control a pretty large amount of financial services business. I would estimate that to be somewhere between 50 and 60% of business is sitting inside wirehouse brokerage. Next, we have P&C, that's property and casualty multi-line agencies. So P&C multi-line agency would be an insurance agency that provides multiple coverage under a single policy. So a P&C type firm would be a Geico, a Travelers, a Progressive. That would be examples of these firms. Some dabble into financial planning as well. So you'll have some firms that are P&C firms that do a little bit of planning, a little bit of investment management. But in general, those firms would focus on insurance coverage. Next, we have life and disability insurance companies. And I'll tell you that a lot of P&C, property and casualty companies, are also life and disability companies. So they sell both of those types of policies. So a life and disability insurance company would be an agency that either sells or gives advice on life and disability insurance. They might have sales in the annuity areas as well, and their services are dependent upon the type of agents. So we have an independent agent, and then we have a captured or exclusive insurance agent. So we could go into those two areas a lot deeper. Examples would be Mass Mutual, State Farm, MetLife. These companies do dabble into the world of financial planning as well, as insurance is a critical piece to financial planning. A number of life and disability insurance agents also work with financial planners. So if I'm a fee-only financial planner, I can't sell life insurance. There are a few ways that I can, but it's really difficult. Most don't. So most fee-only financial planners work with a life and disability insurance agent so that they take their clients over to their insurance agent and a policy is directly sold to fulfill the needs of a financial plan. Next, on the fringe here, we have what's called a franchise independent broker-dealer, but I'll stop before I define that and tell you the attributes of this darker section. The attributes would be, these are very entrepreneurial opportunities. There's a high-risk, high-reward relationship in that when you go to work for most of these companies, not all of them, but most of these companies, there's an expectation that you're going to be involved in business development so that you would bring new clients in the door. Now, each one of these types of companies has their own ways of doing that. So maybe it's a bot lead process. Maybe in some instances, it's through running seminars. Maybe in some instances, it's through referrals and calling friends and family. And in some instances, you would be working on a team, and inside of that team, you would be working the clients of somebody else. So it varies greatly from firm to firm, and even within a firm, the opportunities that exist. However, you see loosely that this is a high risk, high reward, and that if you are able to develop a lot of business, then the payoff is large. It's a relatively large income associated with those. The expectation would be that you would develop a book of business, and there's decent training, pretty good training. Most of the training in these areas tend to be in the sales cycle. So how would you develop relationships? I started out in this section of the industry. As a matter of fact, coming out of college, whenever I did years ago, one of the only ways into financial planning and financial services was through this quadrant. So let me back up to franchise independent broker dealers, because I'll tell you that they have attributes of both this darker color and the fuchsia color, or the turquoise color that we have here. So franchises, independent broker dealers, they're similar to a full service brokerage. However, they ultimately are independent contractors. So they're not an employee of a wirehouse firm. They may operate underneath a wirehouse firm, but they're not an employee. They're an independent contractor of that wirehouse firm, and some of them operate as RIAs, Registered Investment Advisory. So some of them operate as duly registered, so they're both an IR and an RIA simultaneously. business is typically done under their name. So an example of this would be Raymond James Financial Services. So Raymond James is the broker dealer, but I'm an independent contractor through Raymond James. As a matter of fact, internally, Raymond James gives that two names. You have Raymond James, RJA, Raymond James Advisors, and then you have RJFS, Raymond James Financial Services. You've probably never heard the name RJFS, Raymond James Financial Services, because that's the independent, that's the franchise independent, and they would use their own name. So an example of this would be Carter Financial Management out of Dallas. You don't ever see the name Raymond James. It's down in the small print somewhere, but it's Bill Carter's name because he's an independent contractor working underneath Raymond James. Other examples of this would be Ameritrade, or excuse me, not Ameritrade, Ameriprise. So in Ameriprise, you can be a P1, P2, and I think a P3. That's level of independence. I can work directly underneath Ameriprise to where I'm paid as an employee, or I can work as an independent, which, so now you see they're both a wirehouse and an independent. So I could be working for Doyle and Associates, for example, with Terry Doyle. With Doyle and Associates, I do not hear the name Ameriprise. It's in small print somewhere, but Doyle and Associates is holding out their shingle and saying, we are Doyle and Associates. As such, they are a franchise independent broker-dealer. LPL is another big name that maybe you've heard of, but many of you probably haven't because very few would call themselves LPL. Out of Fort Worth, Snow Garrett Wealth Management. They're an LPL firm. They clear through LPL, and they're a franchise independent. Again, some of the bleed over even from here is an independent can be duly registered. So they, why would I be duly registered? As duly registered, I'm fee-based, not fee-only, meaning I'm going to predominantly charge a fee for services, a percentage of assets, to my clients, but I also sell a product that allows me to gain a commission. Most of the time in this quadrant, that would be insurance. So let's use the example of Doyle and Associates. I might do fee-only financial planning for the majority of my client assets, where I'm creating a financial plan, I'm going in and managing their stocks and their bonds, I'm helping them with their retirement decisions, broad tax strategy, all of these areas. But I also, when it comes to the insurance quadrant, I don't farm that out. I don't work with the L&D insurance agent that we talked about earlier. I do it myself. And since I sell life and disability insurance myself, I cannot be a fee-only advisor, which means I'm going to have likely a dual registration. As a dual registration, it means I'm a fee-based financial planner. And as a fee-based financial planner, I am selling some products on commission and some for a fee. So I realize that's a really that's probably the hardest one to wrap your mind around, is that particular area. And it fits in the high risk, high reward, and also in the salary positions, because I have students going out into those independent broker-dealer franchises who earn both a salary and they earn a commission in some instances. They work underneath somebody with little sales expectations, or they work on a team and have high sales expectations. So it varies greatly inside that quadrant. We do send quite a few students into that quadrant. The attributes now, as we move into this turquoise color, is very defined career paths. So if you're going to work in a franchise, an RIA, an accounting or tax RIA, or in some instances that Robo and what we define as Agri, analysis, government research, and education, these tend to be very defined career paths. They almost always are salaried positions, have pretty solid development and training. You probably don't know a lot of these names, so as I go through and tell you the names of these firms, you've not heard of them. Most likely they don't do national commercials and things of this nature. This is a high growth area, so some of the largest growth in the market today is happening inside of this quadrant. And there's strong mentorship. I would say there's strong mentorship in both the two upper quadrants here, but there's very strong mentorship oftentimes inside of these turquoise firms. I'll also tell you that you'll likely be wearing the most hats in these turquoise firms. So if you go to work for an RIA firm, you are going to be doing almost everything inside of the firm, most likely. At some point in time, you will have done almost every role inside that firm because there's 2 to 3 people working there, right? And when there's 2 to 3 people working inside of a small RIA shop, everybody does a little bit of everything. There are very large RIAs, and I'll talk about that here in a minute, and there are large independent broker-dealers as well. So again, there's levels within levels. Let me flip over now and talk a little bit about an RIA firm. This is a registered investment advisor. You'll hear throughout time when you talk to me that word RIA. You'll hear wirehouse, you'll hear fee only, you'll hear fee-based, you'll hear a lot of these words. So RIA means registered investment advisor. They have to be registered with the SEC and or state securities agencies. Services that they would have and that they would sell would include stocks, bonds, mutual funds, holistic financial planning, ETFs, other investment vehicles. But as an RIA, they're not selling that to you directly. They go work through a custodian. These are mainly, actually exclusively fee-based advisors. Some have a hybrid firm, but they'd have to have 2 different umbrellas. So they'd have their RIA umbrella and then a second umbrella that has an arm's length transaction to accept commissions. So the RIA half of the firm would be an independent registered investment advisor. Examples of this, a very large one in the Dallas area is RGT Wealth Advisors. In College Station, a smaller practice would be Paragon Financial Advisors or BRIO. Plant Moran would be an example of a national name. So these can be very large into the billions of dollars or small to medium size into the 50 million to 200 million range. Most RIA firms are going to charge somewhere around 1% for assets under management. So the assets that they manage of yours, they are going to keep 1% of that as their fee associated with doing business with you. And inside of that, again, there's many, many layers in how people get paid as an RIA firm. Overwhelmingly, it's a percentage of assets managed. But if I'm doing a holistic plan, I might do a fee offset, meaning that I'm going to write a financial plan for you. And if the fees associated with managing your assets are large enough, it'll offset the cost of the financial plan. Maybe my planning fees are $4,000 per year in writing you a complex financial plan. My fee that I'm going to capture, 1% of your business, will offset that. Some will charge those independently. I'll do a 1% fee for managing your dollars, and I'm going to charge you a financial planning fee. I'll tell you, there's a lot of compression in this side of the house where if everybody's lowering the amount that they're charging for a fee or for planning services, then it's kind of hard for you to be the person that charges 1.5% plus a $5,000 planning fee. You have to have something very special to be able to do that. Next is just going to be a tax-heavy accounting or tax RIAs. I'm seeing a large number of these spring up. What that looks like is an accounting firm that also provides financial planning services. So it's not just limited to investment planning or estate planning services, but it's broad financial planning. So you see a growth. I'm seeing a real growth in this area as accountants, CPAs, are realizing there's a lot of opportunity for them to open up an RIA and manage money simultaneously. So KMH is a partner of our program. They're one of our founders. They're down in Victorias, Texas. They've had the RIA arm for about 20 years this year, I think, but they've had the accounting practice for 50 years. So they grew the accounting practice into an RIA firm. They still do accounting, but they predominantly do wealth management now and holistic financial planning. Next, we have Robo-advisors in fintech. I have not sent a ton of students into these jobs, but we're growing in that area. A robo-advisor is a self-guided online wealth management service that provides automated investment advice. I would not say that they've moved into holistic investment advice at this point in time or holistic financial planning. Most of the advice is going to be based off mathematical rules, algorithms, heuristics, rules of thumb, etc. Fintech is just a word, and it's a word that's putting together financial planning or finance and technology. So it's just any area of technology that improves one's financial life. This could be an app like mint.com. That is fintech. So financial planning programs across the country send students to all of these areas, to robo opportunities, to all the way through to fintech. What would some examples of this be? You've heard probably some of these names: Betterment, Wealthfront, Personal Capital, Bloom would be one. PFIN, actually an Aggie is the CEO of PFIN. PFIN is an artificial intelligence financial planning company that has developed algorithms that have some similarity to Amazon in how they apply to providing holistic financial planning advice. Next is a small quadrant, and that's Agri, and that's analysis, government, research, and education. So this is a huge quadrant, and it's really the catch-all area of what's left after we put all of these different tribes together. Analysis and government, I'll just define where those opportunities might be. As an analyst, or in the analysis side, you could go to work being an analyst, a CFA, even inside of financial planning, and you may work inside of a financial planning firm. So a firm like Tallison Wealth Management out of Dallas, they're going to have an analyst role setting inside of a wealth management firm. So you could operate with that analyst side overlaying in financial planning. You might, though, go to work for a big consulting firm. You might go to work for a large mutual fund. There's a lot of places that in the analysis side you could go to work. Research typically is going to be done at universities. So some people will go on, like myself, to work at financial planning programs setting in universities or for-profit institutions all across the United States. This could be working even in extension programs inside of universities. You might go to work for an education, for-profit education provider like Adulton Education or somebody along those lines. And then government obviously very much overlays with financial planning. That could be going to work in Social Security. To some extent, it could be going to work for some of these really large defined benefit plans at the state level. So you could go to work for the state. A place to get a job like that would be through NAGDA. So we have a NAGDA competition team that we send, and don't ask me to tell you what that acronym stands for. It's something like the National Association of Government Defined Contribution Administrators, I think is what it is. So it'd be the big DB plans at the state level. You go to work for one of those. Those tend to be salaried opportunities, slow growth, high job security, those types of things. Now we're moving into the yellow quadrant. These tend to be very corporate roles, sometimes blended compensation models where you're going to get a salary or a salary plus bonus and commission. That sort of maybe a salary with a blend of commission. They do have very structured development and training. First one is banks. So inside of banks and credit unions, you offer a wide range of financial services. So not only could you do financial planning, but you can also get into the credit market, into brokerage, into any one of the credit angles, from mortgage all the way through to even credit cards. So banks and credit unions are going to be large mass conglomerate financials, and some of those names that I said, Wirehouse earlier, are the same names. Wells Fargo, a Chase, a Bank of America, a Frost Bank. Some of those roles inside of banks can be very salaried roles. Some of them are going to be very much salary plus commission. So those are the opportunity sets setting inside of banks. There's a lot of growth there because banks already have clients, right? Banks think in terms of being a farmer. Slow growth relationships. So for somebody starting out into the profession, it can be a great place. You're working the clients that are already in place because they're working with tellers, and tellers and others inside the bank can send business to the advisor, the planner, inside the bank. So there's some real opportunity sets here in a unique way, setting inside banks and credit unions. Next would be a discount broker. These would be names you've probably heard of: E-Trade. Fidelity has somewhat of a discount brokerage arm, TD Ameritrade. Even Bank of America has somewhat of a discount brokerage arm for some of their clients as well. They carry out the buy and sell orders, but they do it at a reduced commission rate. So I'm not looking for advice. I want to go buy a stock, or I want to go buy a mutual fund, and I don't want to pay anybody for advice. I just want to simply execute a trade. That's what a discount broker does for you. Currently, this is a transition area. So their business model is now moving to where they are offering more advice or ancillary services, because there are less people who are going for self-management of accounts at a discount, because there's so many other discount offerings that are available. So this is kind of a tough quadrant. I think there's still a lot of opportunity there working in the discount brokerage arm, but I'll tell you, it is competitive. Last piece, I do not send a lot of students here, but it is an option, and that's product distribution. So product distribution could be all the way, when I think of actuarial services, so working internally inside of a large insurance company as an actuary, all the way through to being a wholesaler. So that's selling mutual funds to advisors who sell the mutual funds to the end client, which is the financial planning clients. So a wholesaler is typically involved in the home office, even working on product creation or development to help meet the needs of financial planners. So this could be some insurance companies. It could be mutual funds like Delaware Mutual Fund, for example. Let me open up now another picture. This picture simply shows the heat map of some of these opportunities. So you'll notice the names don't line up perfectly here, but I wanted to show you the sales heat map because I get asked that a lot. Where inside of these loose financial planning concentration areas are the expectations going to be high for me in sales, for me in business development? Because some students are very interested in being involved in the business development process, and then others are not. They are more interested in back office or working on a teams-based approach. Here is a good impression of what that looks like. So here you see, from wirehouse to life and disability insurance sales, you tend to have high expectations on business development. Now, I will say, wirehouses, because they have such a large number of opportunities, are now having offerings that are not sales, are not business development concentrations as they used to be. So you can go to work for a team at Merrill Lynch, for example, have zero sales expectations. I mean, everybody to some extent is going to be involved in meeting with the end client, thus there is some level of sales, but no expectations on bringing X number of assets in the door the first year or anything like that. Life and disability insurance sales, for the most part, that's always going to be there. An expectation that you're going to develop new clients. Again, there's a risk-reward relationship here. There's risk in that you're being paid off of a commission predominantly, or off of the number of clients that you develop, but that return, that reward is high. PNC multi-line agencies, the franchises, and some portion of banks and credit unions are all going to be a little bit hotter in the heat map for business development. The other areas obviously could have heavy sales involved in them, but I would say at net, you're less likely to see that happen. So hopefully this gives you a rough estimate. And again, it's not a perfect picture, but it's the best I could do, given the broad nature of our industry, that showcases the sales cycle, or the sales expectations, or the business development expectations in each one of the areas, loose areas of planning.